Okay, so national exam prep questions is what we're going to do. I'm taking the managing brokers test tomorrow, and I took it about 6 months ago. I didn't even study for it. I just kind of cold just to see how it would go. And I'm doing a lot of my schooling at realestateschool.org. That's where I usually do my stuff. I can do it online, and I like that format that they have, and they have a lot of support. This first section, I failed over the national portion. Like I passed the state portion, and the national portion was where I was weak. And then the math was extensive. So there's math that I'm going to study today, and the national portion. I've been at it for about 2 days straight at this point. I work full time at two or three different jobs. And so I'm just pulling long hours right now. And then I'm going to walk into the test tomorrow morning at 9 a.m., pass it. And then my intention after that is to move on and get my license in a different state. So let's do this. What would have to happen for a VA loan to be granted for the purchase of a 1 family to 4 family? The veteran agrees to live there. The veteran certifies the rent collected will equal the mortgage payment. The loan will be amortized for not more than 20 years. The down payment will be at least 10%. I'm going to say the veteran agrees to live there. Which of the following would usually occur in a sale and lease back transaction? The rent that the seller pays is not income tax deductible. The buyer keeps capital in inventories rather than in reality. The seller gets a return on the purchase in the form of rental payments. The property is sold on the condition that the new owner lease it back to the seller at the time that title passes. That's the answer. I've been involved in these transactions before. The blank is a standardized yardstick for expressing the true annual cost of borrowing. The choices are RESPA, APR, ECOA, Regulation Z. We're going to go with APR. Regulation Z, I was studying it last night, has to do with TILA, which is the Truth in Lending Act. It's not that. So we're going to say APR. Which of the following acts would RESPA prohibit? Real Estate Settlement Protection Act is what that stands for. Blockbusting, redlining, steering, or paying of kickbacks. Blockbusting, redline, and steering all pretty much fall into the same category. So I'm going to say paying of kickbacks. Blank is considered a conventional loan, a commercial bank's ARM loan, VA guaranteed, Fannie Mae mortgages, FHA insured. We're going to go with the top one, a commercial bank's ARM loan. The true cost of most states, the mortgager has the right to regain the property by paying the debt after a foreclosure sale. That right is called, I think that's the redemption. Let's see what we got. Vendee's right of redemption, equitable right of redemption, statutory right of redemption, owner's right of redemption. Ooh, so Vendee sounds wrong. Equitable right of redemption, I'm going to go with just owner's right of redemption. That sounds pretty simple. What is true of the maximum permissible loan to value ratios? They are based on the banker's competitive market analysis. They are fixed by law for conventional loans. They are not determined by federal statute in the case of FHA loans. They are based on sale price or appraised value, whichever is lower. What is the maximum permissible loan to value ratio? Well, the loan to value ratio depends on how much you're putting down, how much the property is worth, and what type of loan you're getting. So they're based on the banker's competitive market analysis. No.
They are fixed by laws for conventional loans. Well, they're for FHA and VA as well. So, no, they are not determined by federal statute in the case of FHA loans, maybe. They are based on sale price or appraised value, whichever is lower. I'm going to go with that one. RESPA, Real Estate Settlement Protection Act, requires the lender to provide a detailed good faith estimate statement at the time of loan application or within 3 business days to whom? The seller, the buyer, neither the buyer nor the seller, the buyer and the seller, the buyer, the person getting the loan. To whom should a broker refer a buyer to if the buyer wants to take out an FHA loan? The Federal National Mortgage Association, the Federal Housing Administrative Office, an FHA appraiser in the area, any approved lending institution such as a bank or savings and loan. I'm going to go with that. It is in a blank market in which a lender may sell a loan that a mortgage banker had previously originated. A consumer, mortgage, primary, or secondary. It is in a secondary market in which a lender may sell a loan that a mortgage banker had previously originated. That's going to be my answer because primary is the first guy to touch it, is what I'm thinking. Answering the following questions. The minimum passing score is blank percent. What is the process called when a mortgage company assembles a number of loans into one package with the intention of selling it to a permanent investor? I think that's a portfolio. Blanket financing, discounting, warehousing, package financing. Ugh, no portfolio. What is the process called when a mortgage company assembles a number of loans into one package with the intention of selling it to permanent investors? Warehousing, discounting, package financing, or blanket financing? I'm going with warehousing. Which of the following fluctuates over the term of the loan under an FHA graduated payment mortgage? The monthly payments, the finance charge, the annual rate, or the interest rate? The monthly payments. FHA arm. The RESPA closing statement is allowed to be examined on or before the closing date in order to make sure the title insurance came from the right company. Check for mathematical errors. Provide for special fees to specific parties for business related to the real estate transaction. Allow the buyer to see the cost at or before closing to see if he or she can get the loan at a cheaper price. I think it's that. Which of the following is false concerning conventional loans? The policy requirements of the lenders are not uniform. So, which of the following is false concerning conventional loans? The policy requirements of the lenders are not uniform. They are made to the buyer without governmental insurance or guarantee. They require a higher down payment than non conventional loans. The requirements to qualify are uniformly fixed by state law. I'm going to say that the requirements to qualify are uniformly fixed by state law. Who would be the most likely person to pay for the title insurance if the lender under a deed of trust requires it? The trustee, the beneficiary, the mortgagee, or the trustor? Who would be the most likely person to pay for the title insurance if the lender under a deed of trust requires it? Whoa. Guys, please. The trustee, the beneficiary, the mortgagee, or the trustor? I'm going to say no. I'm going to say caught between the beneficiary and the mortgagee. So the mortgagee is the person buying the property. I believe the beneficiary is the person it reverts to in the event that they don't make their payments, which would be the seller. So I'm gonna say the mortgagee. I want to say the beneficiary, but I'm going to say the mortgagee since they're the ones shelling out the cash. Would this violate the Truth in Lending Act if an owner advertised the following message? Gorgeous acreage, only 7,000 down. Owner will personally finance down payment. No, brokers can advertise the down payment. This is an owner. No, owners are not covered by Regulation Z. Yes, since a down payment was stated. Yes, acreage is not exempt from Regulation Z. I'm going to say no because it's a for sale by owner. In lending practices, discrimination is prohibited under who? Fannie Mae, the Truth in Lending Act, ECOA, or RESPA. ECOA sounds like it starts with the word equality. What is the primary purpose of truth in lending? To disclose the true cost of obtaining credit. To disclose the true cost of only an FHA loan. To control interest rates on behalf of the consumer. To control the true cost to close a transaction. I'm going to say to disclose the true cost of obtaining credit. One of the following options, out of the following options, which would most likely result in the largest reduction of principal balance more quickly? 13% over 15 years, 10% over 30 years, 14% over 20 years, or 11% over 20 years. Oh, wow. Okay. So out of the following options, which would most likely result in the largest principal balance most quickly? 13% over 15 years. I'm just going to automatically say that because it's the shortest time frame. At what point would a single parent have to admit that part of his or her income is from child support if she or he were to apply for a real estate loan? This type of income never needs to be disclosed. It would be a violation of ECOA. If the parent was relying on the income for repayment of the loan. When applying for a VA or FHA loan, if the parent's income is less than $25,000, if more than 50% of the parent's income is from non-wage sources, I'm going to say A, this type of income does not need to be disclosed. Answering, I'm going to go to the end and work backwards so we can see how many questions there are. Okay, 46. Let's go to number 46. Which of the following is true regarding real estate instructors? They can include courses they teach toward continuing education requirements. They must renew their licenses every 2 years. They must renew their licenses every year. They can only renew their license after passing a special instructor's exam. I read last night that they are just like the rest of us. So in Washington State, it's every 2 years. Real estate licenses in the state of Washington must be renewed every 2 years. Just said that. What is 1/8 of a mile squared in acres? Oh, wow. Okay, so 1/8 of a mile squared in acres. So 1 acre equals about 43,000 square feet, if I remember right. So that means half of an acre is going to be somewhere around 22,000. That means a fourth is going to be somewhere around 11,000. And that means an eighth is going to be somewhere around 5,500. Okay, let's see what my choices are. What is 1/8 of an acre? What is 1/8 of a mile squared in acres? 1/8 of a mile. So I just did an acre in square feet. My choices are 5, 10, 24, or 60. 5. What is 1/8 of a mile squared in acres? I'm going to say 5. I don't know if that's right though, because I just did acres. And how many square feet are in 1 mile? Question mark. When a person takes the real estate salesperson's test, what is the required minimum score for passing the test? 75 on both portions, 70 on both the state and national portions, 75 on the state and 70 on the national. 70. A prime example of functional obsolescence would be peeling paint, a residential home with central air conditioning, residential home built next to a factory, a steep, narrow stairway in a 2 3/4 story home. Residential home next to a factory doesn't belong. One of these things is not like the other. That's functional obsolescence. Which of the following options would be true if Antonio Sanchez commits a violation of license law at a time where his license is active, but it isn't found out until his license becomes inactive? The Real Estate Commission could suspend Antonio's license but not revoke it. He could be placed on probation, but his license cannot be suspended or revoked. Since Antonio's license is inactive, he is no longer subject to disciplinary action. Antonio is subject to the same disciplinary actions as an active agent. I'm going to say yes to that one because it just seems right. Okay, next page. An appraiser named Mr. Thigpen is appraising a single-family residence for which he has located 5 closely comparable properties, which have all been sold within the past 5 months. It is a 4-year-old custom-built house that rents for $750 a month. Which of the following appraisal methods would Mr. Thigpen weigh the most in his final estimate of value? The gross rent multiplier, the income approach, the market data approach, or the cost approach? Okay, so for my notes, gross rent, income approach, market data, and cost approach. I'm going to have a separate video about those after this. Okay. He's appraising a single-family residence, which he has located 5 closely comparable properties, which have all been sold within the past month. Okay. So that's going to be market data. It is a 4-year-old custom-built home, that rents for $750 a month. That's going to be gross rent multiplier. Which of the following appraisal methods would Mr. Thigpen weigh the most in his final estimate of value? I'm going to say market data. Which of the following is false if Steve Thompson's license becomes inactive for a period of less than 3 years? To reactivate his license, Steve must take a 30-hour course as well as pay the fee. Yes. To reactivate his license, Steve must complete an application and pay a fee. Steve cannot perform any duty for which a real estate license is required. So that's true, and the first one's true. Even though it's inactive, Steve must renew his license every 2 years and pay the appropriate fees. That's false. A room measuring 5 inches by 7.5 inches on a scale drawing includes a carpet, which is to be installed in the room for a cost of $20 per square foot. If it's a given that the scale is 1 inch to 3 feet, the cost to install the carpet would be how much? Oof, getting a little brutal here. Okay. Clearly, we're going to need scratch paper on this old test. Let me find another blank piece. Here we go. All right, so the room is 5 inches. And we're going to have to convert that by 7.5 inches. And we're going to have to convert that. So what you're going to do is you're going to write it like this. This is how you write a conversion. And then the conversion says that the scale is 1 inch to 3 feet. So down below, we're going to put 1 inch, 3 feet, 1 inch, 3 feet. The reason I'm doing it that way is because then we cross out the inches like so, and we're only left with the feet. So then on this, we're going to multiply, because you multiply by the tops or divide by the bottoms. Sorry, I need to raise this up a little bit. So it's going to equal 15 feet. And over here, we're going to be measuring 7.5 by 3. So that's 7.5 times 3, which is going to equal 714.21, and then 22.5. So 22.5 feet. Now, to get the actual square footage of the room, we would multiply the two numbers by each other. 22.5 times 15. I need to do that on my trusty calculator. 22.5 times 15 equals 337.5. So that room is 337.5 square feet. Okay. So then it says that the cost of the carpet is $20 per square yard. So once again, we have our square feet here. So over here we have a square yard. And how many square feet are in a square yard? There's 3 feet in a yard. So I think a square yard is going to be 9 feet. I think there's going to be 9 feet, 3 times 3. And so there's going to be 9 feet in a square yard. So now I have to take that 337.5 and I have to divide it by 9. And my answer there is 37.5 square yards. 37.5 square yards is what I just came up with. And I'm going to multiply that number by $20. So 37.5 times $20 is going to tell me how much times 20 equals, according to my calculations, $750 is the answer for my carpet. Okay, so now the question says, a room measuring 5 inches by 7.5 inches on a scale drawing, including a carpet, which is to be installed in the room for a cost of $20 per square yard. If it's a given that the scale is 1 inch to 3 inches, the cost to install the carpet would be how much? My bottom choice is 750 square feet. So look carefully at this and know this conversion chart is how you convert from one method of measurement to another. Inches to how many feet the inches standardly are, and all you're left with is the feet. And you multiply sideways, and then if you have to do any cancellations with the bottom, like down here, you divide. So on this one, I divided the 337.5 by the 9 feet, and that's how I got all the way to 750. Which of the following should a real estate agent tell his customer, the buyer? A pending or recent zoning change? The seller is getting a divorce? No. How long a property has been on the market? Sure. The seller's motivation for marketing the property? I guess. I mean, you tell your buyer whatever you want. 2 things that are pretty important, though. How long the property's been on the market, or a pending or recent zoning change. I think I would want to tell my guy that zoning change. The rest of that stuff we could just kind of come up with. What is it called when during an appraisal process, a person inspects shopping centers, the distances from schools, and the overall social fiber of the community? Market data approach, social analysis, neighborhood analysis, site analysis. Site analysis sounds right. We better find out though if those other things are actually going to be on the test. Site analysis, neighborhood analysis, social analysis. Sounds like that'll get you sued. Market data approach. Okay, and I went with site analysis. The Turner family owns a 5-year-old home in a semi-rural area. That means kind of farmy. If there are new plans for construction of a regional airport and the main runway is directly placed in line with their home, but happens to end a mile before it, will this weaken the value of the Turner home if the construction plans come to fruition? Yes, because of economic obsolescence. Yes, because of functional obsolescence. No, because noise from aircraft passing overhead is not recognized as affecting property values. No, because value would increase due to the location close to the airport. Probably not. So we have economic obsolescence. We need to verify if that's a term. And we have functional obsolescence. I'm going with that because it sounds like a house and an airport do not belong in the same neighborhood together unless you want to really have just a nice, cheap little house. Can an owner advertise the down payment if he or she is selling his or her own home? We already studied that earlier on in this chapter. And yes, because it is his or her own home. Yes, as long as it was listed with a broker. No, because it violates Regulation Z. They said Regulation Z in that earlier one, remember? No, because it violates RESPA. I'm going to say yes, because it's their own home and they're not a professional. If Rodney Wagner leases 4,000 square feet at $12 per square foot and 5% of gross income, and the total annual rent that he paid was $80,000, what is the gross income on which he paid percentage rent? Ugh. Fine. Stupid math questions. Okay. So what's my question? What was the gross income on which he paid percentage rent? Okay, so he leases 4,000 square feet. Okay. At $12 a square foot. And 5% of gross income, and the total annual rent that he paid was $80,000. And 5% of gross income. 5% of gross income. And the total that he paid was 80 grand. So 80K was the total he paid. Okay. So we got to start with that 80K would be, what was the gross income on which he paid percentage rent? If 80K was the total that he paid and he only paid 5%, what is 80K 5% of? So at that point, we have to convert that 80K into the master number that it's 5% of. So I think we would take the 80K and multiply it by 95%, which would be 0.95. Let's see if that works. Doesn't sound like that's going to work. 80,000 times 0.95 equals 76,000. Oh, so 95% of 80,000 is 76,000. So then if 80,000 is 95% of something, and we found out that if we multiply 80,000 times 95,000, that gives us 76,000, which is 95% of 80,000. So then instead, we want to say 80,000 is 95% of X. So then, as you're aware, to move things past the equal sign, we have to multiply or divide them out. So now we're going to say 80,000 divided by 0.95 equals X. Let's see if that works. So 85,000 divided by 0.95 equals 89,000. So X equals 89,473.68. Now we got to see if that's a choice. Come on. Not even close. Not even close. Okay, so I tried that method and it didn't work. He leases 4,000 square feet, so I missed a step, obviously. He leases 4,000 square feet at $12 per square foot, and 5% of the gross income, and the total annual rent that he paid was $80,000. What was the gross income on what he paid rent? I guess the other thing, oh wait, maybe I just missed a step. So we want to know 5%. So our choices are 560, 580, 640, or 680. So we're going to multiply 680 times 95%. That's going to give me 646. Instead, we're going to multiply 680 times 5%, 34. 640 times 5% is 32,000. 580 times 5% is 2,900. So we need 95%. So 680 times 95% is 646. I'm gonna have to come back to it. So this one, I'm just gonna blind guess. He leases 4,000 square feet at $12 per square foot. So I got a 4,000 square foot office building, and I leased it at $12 per square foot. Let me start there. So, oh wait. So I got a 4,000 square foot office building, and I leased it at $12 per square foot. So my lease is going to be 4,000 square feet times $12 a square foot. So my lease is 48,000. Let's go with that. So my lease equals 48,000. And 5% of the gross income and the total annual rent that he paid was 80,000. Okay, so let's take that 48,000 and let's multiply that times 12 months. That's going to put my rent at 576,000. Okay. And the total annual rent that he paid was 80,000, which was the gross income on which he paid. What was the gross income on what he paid rent? So 576 is how much it's costing me to rent it. And then 5% is my times 0.05 equals 2880, and he paid 80. So I think it's 680. And we all know I'm just guessing. Hopefully they'll teach us what we did wrong on this. I didn't have a study manual. We're just taking this. I don't know where the study manual was. I didn't see it. And so I'm just figuring the answers out from the test. from what I already know in life. A mortgagee or beneficiary would have an appraisal on the property in order to protect the buyer from fraud, make sure the buyer did not pay too much. Yeah. Assure the property value is sufficient to cover the loan. Yeah. To determine the value of the property. So, mortgagee or beneficiary would have an appraisal on the property in order to determine the value of the property, because it said assure the property value is sufficient to cover the loan, make sure the buyer did not pay too much, protect the buyer from fraud. All of those are the same. The one that's not the same is to determine the value of the property. So that tells me a mortgagee or a beneficiary is the seller, not the mortgagor. The mortgagor obviously is the buyer, because those three answers were actually identical. To protect the buyer from fraud, buyer. To make sure the buyer did not pay too much, buyer. To assure the property value is sufficient to cover the loan, buyer. To determine the value of the property, seller or buyer. Elimination. Which of the following is the best reason to explain why a buyer would use the market data approach to purchase a home? Which of the following is the best reason to explain why a buyer would use the market data approach, market analysis, to purchase a home? Buyers buy based on how much income can be derived from other property. No. Buyers buy on impulse. No. Buyers buy based on current construction costs. No. Buyers buy after they compare the house with others. Obviously, market analysis. Okay. That is the last questions on that page. And we have another one here. We already did this one. Okay, so we only have one more page to go. A securities license is required for which of the following transactions? Selling a commercial warehouse, selling shares in Fannie Mae, arranging a sale lease back on a commercial property, leasing a commercial building. Do you guys know? Listen to what's wrong. Selling a commercial warehouse, that's selling real estate. Leasing a commercial building, that's doing real estate. Arranging a sale lease back on a commercial property, that's doing real estate. Selling shares in Fannie Mae, that's not real estate. There's another math question. Let's do that the very last. Which of the following would be in violation of truth in lending if advertised loan? Easy financing terms, FHA financing available, assumable loan, no down payment required. Which of the following would be in violation of the truth in lending if advertised a loan? Assumable loan, no down payment, FHA financing, easy financing terms. Easy financing is the same as no down payment. FHA financing available just says what's available. Assumable loan. I'm going to have to say assumable loan because it doesn't tell you anything about the loan. Easy financing terms is real blanket. FHA financing available, super blanket. No down payment required, blanket. Assumable loan, you're talking about an actual loan in that one. How is an owner relieved of the liability if a buyer assumes the mortgage? Graduation, substitution, novation, subject to mortgage. How is the owner relieved of the liability if a buyer assumes the mortgage? I believe that term is called novation, where the buyer takes on the loan for the seller. Which of the following would be in violation of truth in lending if advertised loan? We just did that. Of truth in lending if advertised loan. So it's literally the exact same question. Oh, it's literally the exact same question. It's in here twice. Man, now we're going to miss it twice if I screwed it up. All right, we went with assumable loan last time. Let's do it. In the secondary market, the largest purchaser is Fannie Mae, Freddie Mac, Ginnie Mae, or FHA. In the secondary market, that's where they put all the loans together in the secondary market. After you get a loan and Joe gets a loan and blah, blah, blah gets a loan, they put them all together and they sell them as a package in the secondary market. Who's the largest purchaser? Our choices are Fannie Mae, Freddie Mac, Ginnie Mae, and FHA. I'm saying FHA. What type of interest is used in a repayment of a mortgage loan? Compound, simple, floating, or discount? Compound interest accumulates quickly. I'm going to say simple. We better know these terms though. Compound, simple, floating, and discount. Okay. All of the following are an originator of primary loans with the exception of FHA, VA, credit unions, savings and loans. Ooh, man, rough. Okay, well, that means that our other answer was wrong because they were talking about the secondary market and we said FHA. And if all of the following are an originator of primary loans with the exception of, and it says VA and FHA, VA and FHA are basically the same thing. So that means in that other secondary question, FHA can't be secondary because they're primary, obviously, according to this, which I kind of thought. If you're applying for an FHA mortgage, you're applying for a primary mortgage. Or if you're applying for a VA mortgage, or if you're applying for a conventional mortgage. So then which one of these things is not like the other? We have VA, FHA, credit unions, and savings and loans. So obviously FHA and VA go together. I'm gonna say credit unions because they are privately owned by the members of the credit union. So that's what I'm gonna say. And then we need to go back up to that other one. In the secondary market, the largest purchaser is not FHA. So we have Fannie Mae, Freddie Mac, Ginnie Mae, or FHA. Man, Fannie Mae and Freddie Mac sound a lot alike, and so does Ginnie Mae. Ginnie Mae, I think, is real small. Fannie Mae or Freddie Mac. Let's just say Freddie Mac. I guess we can always take it again if we get it wrong, right? So I guess we better write those down. So we need to know Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA, credit union, and I guess I'll add savings and loan. And we need to find out savings and loan where the information is that I was supposed to be studying for this. Concerning restrictive covenants, which of the following statements are true? They're placed by government agencies in the public record. No. They're placed by private parties in a deed. Maybe. They're placed by government agencies in a deed. No. They're voidable by successive owners. They're placed by private parties in a deed, or they are voidable by successive owners. I'm going to go with that because I think that's like CC&Rs from neighborhoods. Would it be appropriate for a buyer to use a promissory note for consideration on a purchase of a property? Yes. It's accepted as long as the seller agrees. Yes, the buyer can do as he wishes since he's making the contract. No, only the seller can write a promissory note. No, only money can be used as consideration. Yes, this is acceptable as long as the seller agrees. Okay, so we have a math question that I had skipped. If the Waltons are buying a house for $88,000 and the lender is allowing them a 90% loan at 10% interest plus a 2% loan origination fee, how much would the loan origination fee be? Okay, so let's go over it again. And you try and do it at your own. Okay, so $88,000 is the purchase price. They get a 90% is the loan amount. 10% is the interest. 2% is the loan origination. Okay, here's your stuff. So you got an 88% or 88,000 is what they're buying. And they're allowing them 90% for the loan at 10% interest, plus a 2% loan origination fee. How much would the loan origination fee be? So I'm going to say, for me, 88,000, 88,000 times 0.9 for 90% equals 79,200. And I'm going to subtract and they're allowing 2% for the loan origination fee. And the 90% loan at 10% plus a 2% loan origination fee. 88,000 times 0.02 equals 2% of that is 77,440 if I multiply that 88,000 by 0.02. And then if I take that 77,440 and I subtract 88,000 from that, that's 10,000. That's way higher than the choices because the choices are 1548, 1622, 1584, and 1228. So they're buying a house for 88,000 and the lender is allowing them a 90% loan at 10% interest plus a 2% loan origination fee. So if we take 88,000 times 0.02, that would be 1760. But if they're only allowing them a 90% loan, how about if we try it with 78,000, since they clearly have to bring in 10%. Oh, a 90% loan. Wait. So we're going to go 88,000 times 0.9 equals 79,200, I believe, is the loan amount. Now let's try and multiply that by 2%. 1584. That's one of our choices. Okay, so I got this for you. So the Waltons are buying a house for 88,000 and the lender is allowing them a 90% loan. That's it right there. What is 90% of 88,000? So you take 88,000 and you multiply it by 0.9 to get 90%. And then they get a 2% loan origination fee on what they're borrowing. They're only borrowing 90%, not 100%. So whatever number you got from that, you multiply by 0.02, and that gives you 1584. That's 2% of the 90% of 88,000. Okay, so let's hit next. Let's hit next. Let's hit submit quiz and see if we passed it. My score, 65%. We failed. So what did we fail on? Let's go through this together now. You answered the following questions incorrectly. Number 1, true of most states. The mortgagor has the right to regain the property by paying a debt after a foreclosure sale. That right is called the statutory right of redemption. Makes sense. Because remember we studied on an earlier thing that statutory is written legal stuff. So the written legal, basically, statutory right of redemption after a foreclosure. The next one, the RESPA closing statement is allowed to be examined on or before the closing in order to check for mathematical errors. RESPA is to check or mathematical errors. Not to allow the buyer to see the costs at or before closing to see if he or she can get the loan at a cheaper price. Because I think they get that statement 3 days after they apply for the loan. 3, who would be the most likely, and that's RESPA. So RESPA is right before closing. RESPA. Who would be the most likely person to pay for the title insurance under a deed of trust? The mortgagee, the buyer. Buyer pays title in a deed of trust. Another name for trustor is the borrower, while trustee is another name for the lender. It is the borrower who pays for the insurance, even though it is the lender who requires the insurance to protect his or her position. Interesting. So trustor is the borrower. Trustee is the lender in a deed of trust. Got it. Okay. At what point would a single parent have to admit that his or her income were to apply for a real estate loan? At what point would a single parent have to admit that part of his or his income is from child support if they apply for a real estate loan? If the parent was relying on income for repaying the loan. Okay. Whether it is child support, freelance work, alimony, a second job, or any other type of income, the single parent would only have to disclose this information if he or she is relying on it to qualify for the loan. Which of the following would be a violation in truth or lending if advertised a loan? Oh, it was an assumable loan. There was no down payment required. So we need to know truth in lending rules. And then cannot advertise no down payment required by itself. Okay. Because it is a specific statement about only one aspect of financing. Option D does trigger the truth in lending disclosures, unlike easy terms would be appropriate because it's non-specific. Okay. In the secondary market, the largest purchaser is Fannie Mae. Is that right? Yeah, it's Fannie Mae. Fannie Mae is the largest purchaser in the secondary market. Fannie Mae is the largest purchaser in the secondary market. Okay. Fannie Mae is another name for FNMA, or the Federal National Mortgage Association. The National Housing Act established this to specify to specifically start the secondary mortgage in order to attract more investors and funds to help support home ownership. Let me read that for you again because that sounds real important. Fannie Mae is another term for FNMA, or the Federal National Mortgage Association. The National Housing Act established this to specifically start the secondary mortgage market in order to attract more investors and funds to help support homeownership. Got it? So Fannie Mae is the largest purchaser in the secondary market. All of the following are an originator of primary loans with the exception of FHA. All of the following are an originator of primary loans with the exception of FHA. So savings and loans are an originator of primary loans. Credit unions are an originator of primary loans. VA is an originator of primary loans. FHA is not. By insuring lenders against default, the FHA encourages them to make low interest, low down payment loans. It actually doesn't lend money on its own. FHA doesn't lend money on its own. That's critical to know. Concerning restrictive covenants, which of the following statements is true? They are placed by private parties in a deed. So they are in the deed, and they're placed by private parties, probably by the original builder. Usually associated with community management associations and subdivisions, restrictive covenants are intended to maintain consistency within the neighborhood. Although perceived by most as a benefit, they're binding on future owners, and they do limit the owner's use of the property. I have heard you can get rid of them. If they're not enforced for a certain amount of time, I believe that they become unenforceable. That's something to research. A mortgagee or beneficiary would have an appraisal on the property in order to assure the property value is sufficient to cover the loan. Oh, mortgagee. So trustor was the borrower. Mortgagee is the lender. So the mortgagee would be the lender, lending money to the buyer. So they want to assure that the property value is sufficient to cover the value of the loan. So mortgagee is the lender. Question mark. You need to double check that. If Rodney leases 4,000 per square feet at $12 per square foot and 5% of gross income, and the total annual rent that he paid was $80,000, what was the gross income on which he paid a percentage of the rent? The answer was $640. $640. So 4,000 square feet at $12 a square foot, 5% of the gross, and the total annual rent paid, and total annual rent was $80,000. What was the gross income on which he paid rent? And the answer is $640,000. So write that down. He leases 4,000 square feet at $12 per square foot, and 5% of the gross income and the total annual rent that he paid was $80,000. Write that down. The gross income on which he paid percentage rent was $640,000. Oh, here it tells us. So first, you would multiply the 4,000 square feet by $12. We did that, and you would get 48,000, which is the tenant's base rent. Okay, because the total rent is 80,000, it means that the remaining 32,000 was due to the gross sales percentage. Since 5% is the figure, all you have to do is divide 32,000 by 0.05 to get at the 640,000. So first you would multiply the 4,000 by $12, which we did, and you got the 48, which is the tenant's base rent. Because the total rent is 80,000, it means that the remaining 32,000 was due to the gross sales percentage. We just had to assume that. Total annual rent that he paid was 80,000. So we knew that was 5%. Then all we had to do was divide the 32,000 by 5% to get the answer. It's another conversion. The Turner family owns a 5-year-old home in a semi-rural area. If there are new plans for construction of the airport, it is, and the main runway is directly placed in line with their home, but happens to end a mile before it, will this weaken the value of the Turner home if the construction plans come to fruition? Yes, because of economic obsolescence. So we need to look up the terms economic obsolescence and functional obsolescence before we come back for the next round of this. When factors unrelated to the property itself and outside the owner's control diminish its value, looked up, that is when economic obsolescence occurs. That is why you want to determine whether or not a property has become economically obsolete. A quick way to analyze it would be to look at the location and see if it would currently be chosen as a home site. And if it is, what value in comparison with the existing property. Okay. What is it called when, during an appraisal process, a person inspects shopping centers, the distance from schools, and the overall social fiber of the community? That is called a neighborhood analysis. With the purpose of trying to determine a neighborhood's desirability and vitality, the neighborhood analysis is a formal process of measuring, identifying, and analyzing these influences. There is obviously more to it than just driving around. Which of the following is false if Steve's license becomes inactive for a period of less than 3 years? To reactivate his license, Steve must take a 30-hour course as well as pay the fee. That's the answer. To reactivate his license, Steve must take a 30-hour course as well as pay the fee. That's false. That's false. He doesn't have to do that. And I picked, even though it's inactive, Steve must renew his license every 2 years and pay the appropriate fees. That's true. So I read the question wrong. Which of the following is false? A prime example of functional obsolescence would be a steep, narrow stairway in a 2 3/4 story home. There are 2 different forms that functional obsolescence can occur. 1, like in option D, a property happens to be in a poor initial design. 2, in comparison with competing properties, the design and features of a house have become outdated. Seriously, there was 2 answers on this. So my answer was still right. That's crazy. A prime example of functional obsolescence would be A, peeling paint, B, a residential home with central air conditioning, C, a residential home built next to a factory, D, steep, narrow stairway in a 2 3/4 story home. There are 2 different forms that functional obsolescence can occur in. 1, like in option D, a property happens to be a poor initial design, a steep, narrow stairway in a 2 3/4 story home. That's a poor design. 2, in comparison with competing properties, the design and features of a house have become outdated. Oh, so residential home built next to a factory must be economic obsolescence. That sounds like the airport. Whereas the actual design of the home, if it sucks, is functional obsolescence. Got it. What is 1/8 of a mile squared? What is 1/8 of a mile squared in acres? The answer was 10. 1/8 of a mile squared is 10 acres. So we need to know how many square feet are in a mile and how many square feet are in an acre. You need to know that. 10 acres is the same as 1/8 of a mile. If you multiply 1/8 by 1/8, this would equal 1/64th, and then divide that by 640 acres, and then you would get 10 acres. Let's just figure out how many feet are in a mile and how many feet are in an acre. And then we can figure out the squared portion. And that is it for this portion of our test. The first run at, I believe, the national portion. And that was a 65%. So we will come back and take that again in about a half hour after I look up all those terms and have them ready to share. Have a great day.